Growthpoint Properties has become the second South African listed property company to launch an American Depository Receipt program, following in Redefine Properties' footsteps. Now, joining us to explain more about the company's move is Chief Executive Norbert Sassy. Norbert, thanks so much for your time. Why launch an ADR now?
I think, obviously as a company, we're always looking at raising, sufficient funds to run the business, and we need to keep all of our options open with regards to raising capital when, especially a real estate company such as Growth, when pretty capital hungry, and our model in particular is that, we pay out pretty much all of our profits every 6 months. So we don't have the benefit of retained income and big cash reserves that we can build up over time. We pay those cash profits out to our shareholders every 6 months. So whenever we acquisitive or wanting to buy new properties, make new investments, or spend capital on refurbishing our buildings, we need to raise new capital, either in the form of taking on more debt. Obviously, you've got limitations on how much debt you can take on relative to your loan balances, relative to the value of your portfolio, etc. And then the other alternative is obviously equity capital. And by launching the ADR program, it just gives you greater access to international markets, in particular the US investment market, and increases our ability to raise equity capital to grow the business going forward.
Just how much red tape did you have to go through to launch the ADR compared to a rights issue in South Africa or listing in another country?
Sure. I mean, funny enough, it's actually not a lot. There are various types of ADR programs. You get some that are very heavy vis-a-vis regulation and regulatory compliance issues in the US. You can imagine, to be listed on a US stock exchange, there's significant regulatory hurdles that one has to overcome. The ADR program that we are participating in is a regulatory light program, if you want. So by all accounts, pretty low levels of red tape. The BNY, Bank of New York Mellon, obviously run the program for you. There are very little costs involved, for ourselves. So, weighing up the effort and time going into putting it in place versus the potential benefit, we certainly see a lot of benefit in it.
But you didn't just do it on a whim. You must have some reason for it. Now, there's a 46 billion rand market cap. So tapping on the South African doors, not going to be that easy. Is that the reason why you're looking at the ADR? Are the Americans telling you that they'd like to have a little slice of the South African action?
It's a bit of a combination, I would get. At the end of the day, our total foreign shareholding at the moment is about 17%. So it's still relatively small. The South African domestic listed property investment market, if you want, have been very good to us. We've always had great access to capital here locally. But yes, I do think, as one grows to, the kinds of levels that we're at today, not only in terms of our debt markets and the debt capital markets, or being reliant on the South African banking markets, we definitely have to keep all of our options open, vis-a-vis the raising of capital, be it equity or debt capital going forward. You might get to a point where, you're starting to be even too big for the domestic banking market. You might start looking at borrowing from international banks. We've got quite a successful and a very nice Australian business, which we're supporting effectively from South Africa, and have supported the growth of that business. I think the assets there, we've grown from about $450 million to about $1.8 billion today, and all of that support, a lot of that capital support, has come from the South African entity. So it's a broader strategy, Alec, just to gain access to as many capital markets and avenues to capital as we can.
Yeah, Gugu and I know Mark Wayner quite well.
Fairly well.
Big
Yes.
Mark, yeah, pretty well. And Mark's done this first, so he beat you to the punch. Now I'm wondering whether Norbert is learning from Mark, or whether, in other words, following in his footsteps, or saying, hang on, this old man who knows property like the back of his hand is pioneering something that a bigger group like yours should be going for.
Yeah, I don't think it's got anything to do really with what Redefine are doing or have done. The reality is their products out there. BNY Mellon, Bank of New York Mellon, are out there punting this particular service and product of theirs. We see the long-term benefits of it. There's no doubt about it. Perhaps it was just a question of who got the board approval first, as opposed to and who signed the final documentation first.
But it's nice that both of you are there.
Sure.
Because now it's a substantial amount for an American investor to look at.
Very true. But just looking on that, you mentioned that you're very capital hungry and you're using that money to obviously find more acquisitions. And the recent acquisition was the Absec Property Group's, their portfolio, their 17 high quality office properties based in Johannesburg. Why buy them?
we're always on the lookout for good quality investment properties, and in particular ones that we can structure or fund, if you want, on an accretive basis. So our focus is really the distributions we pay to our shareholders every 6 months and growing that as best as we can. So when you find...
So is it all about the dividend then, after all?
Pretty much, yeah. So we're looking at the yield at which we can buy these properties. You can buy much lower grade properties at much higher yields, but in the long term, I think those things catch up with you. They're not even as lettable as the good quality stuff is. So the trick for us always is to find good quality stuff at affordable prices and being able to buy them and still be accretive to our distributions.
The gearing here is very high. I mean, you're taking on R1 billion worth of debt.
Correct. Again, if you look at our balance sheet as Growthpoint as a group, we're sitting at about 23% loan.
So it's easier to absorb this. Was ABSA a keen seller?
I think I don't really know the details of ABSA's strategy, how they became let's say an 85% shareholder, probably 4 or 5 years back. The fact of the matter is, I think most of the banks, ABSA also in particular, I would guess, are looking at uses of capital, an efficient use of capital, and I don't think it's a bank's business to be invested in an investment portfolio, a property investment portfolio. They should be doing the funding, they should be doing the earning fees, etc.
Did they not absorb it because these properties were in trouble?
No. My understanding is not that was the case. No. Yes, the debt levels are high, but I think there's always been pretty decent equity in that portfolio. I mean, we pretty much issuing Growthpoint shares for the equity value in that portfolio.
28%, 4 times gearing. Wow.
Correct.
That's high, even for property.
That is, but at the end of the day, I think the quality of the properties is quite high. And if you look at the concentration, there are 4 assets in there, 4 office parks that make up about 80% of the value. And these are very good quality office parks in great node. Woodmead, you've got in Bryanston,
Country Club,
Country Club, exactly. So good stuff.
I understand that this also is still awaiting a Competition Commission approval.
Correct.
How strong has the opposition been from your competitors?
Look, my understanding was that the 15% shareholder in this particular investment were looking around the market to find a buyer for a while. We, I think, came into the race at quite a late stage. So it certainly was a competitive process, and perhaps in that our cost of funding is slightly lower than that of some of our competitors, given where our share price is trading and given where our ability to tap the debt capital markets and the banks. It gave us a slight advantage to be able to pay a slightly better price than some of our competitors.
Makes sense, particularly because there was so much debt. You would have wiped a lot of people out of the race.
Correct.
Just pick us up, or would like to pick up with the tragedy in Kenya. It was at a shopping centre. Is it likely to have any impact on development of shopping nodes into the continent?
I would have thought on the continent, yes. It's certainly something I think if somebody, any investor should be considering. We as Growthpoint have not got a definitive strategy to be investing into Africa right now. We're pretty much focused on the South African business, the V&A waterfront, and our Australian business. But I would certainly think that anybody investing in Africa, it's part of the risk of investing in Africa. So that's part of the risk of investing.
This is extraordinary. You get terrorists coming into a shopping centre, and that's my point. Is this perhaps game changing for property investors into the continent, or were the Israelis, because it was Israeli owned, perhaps more of a target?
Yeah, I really don't know the answer to that.
But it isn't for you. It's not a problem.
It's not a problem for us. Having said that, shopping centres are public places, and where terrorism or terrorists generally look to make big impact. It involves the public or public spaces, so those risks are inherent in owning shopping centres.
Maybe as a knock-on effect of this, are you going to be having to bolster security in anticipation? It always happens. When there's a tragedy, there's a lot more effort that's put into things like security. Would you be looking at that? We
certainly, I think something like this would warrant a review of the current security procedures that we've got at our shopping centres and contingency plans. We haven't rushed to do that in the last week or two. There's always a step up for us in terms of security at our centres leading into the festive season. You see, bank robberies and robberies at stores in our shopping centres. That does generally pick up cash, ice, etc. towards Christmas time. So we are a lot more vigilant around this time of year leading into Christmas. But certainly no doubt in my mind, in conjunction with our insurers, something we should seriously consider from a risk perspective.